Today I'm going to show you a little bit about the EMA. So the EMA is the exponential moving average, and it helps show trend lines, and it helps show if a quote or a stock is going to go up in value or price. And so I'll show you how to set this up. So I use Option House by E-Trade. It's a exclusive program if you're an E-Trade customer and you trade with them. So what you can do is you can go to Studies here and moving average. If not, you can go to All Studies over here and you can find moving average. Let's find it. Moving average there. Okay, we'll click on this. Right here you can go to, I do a period of 15 days right here. We'll put that in, and I go to the type over here, and we want an EMA instead of SMA, like the simple moving average. We want exponential moving average, and that helps show trend lines a lot better, and basically shows the breakout of a stock before it completely breaks out. And so we can kind of get into a trade early, especially when you're doing day trading and swing trading. We want to make sure that we have the upper hand on other investors. So I'm going to just change it to blue color because I like blue. And so right here I'll show you this. This is a stock that I like to trade. It's called DGAS. It's a leveraged inverse ETF of natural gas. It sounds really complicated, but I promise you it's not at all. So it's based on natural gas, and so when the price of natural gas goes up, DGAS is the inverse of that, and so it goes down 3 times, as you can see here. So we'll say that natural gas goes up 1%, and so DGAS goes down 3% because it's 3 times the inverse. So that may sound complicated right now, but it's really not that bad. So what I want to show you on the EMA is it really helps you show where a quote or a stock price is going to bounce at, and it also shows you when good buying and selling point, but I also use these other indicators down here to help judge that, like the MACD indicator and the RSI. So I'll get right into this. So right here, this is the past few days. This is 131, so the end of January. And so DGAS, it's based on natural gas, and natural gas is used to heat homes. And so in January, they had we had 2 cold spurts in the United States and a lot of cold weather. And so that natural gas prices, they were shot up because there was a less supply of it. And it's, simple supply and demand. Once there's not that much of natural gas, and the price of each container, how much, whatever they judge it by, goes up. And so then UGAS goes up, which is the inverse of DGAS, and so DGAS goes down for the past January, as you can see here. And so February comes around, and they forecasted that it's going to be a warmer month, and so the supplies for natural gas are going up, and demand is not as high as it was. So it's a good time for the reversal, as you can see here. So the price of natural gas is going down because there's an excess supply of it, so there's more to go around. So that's why DGAS goes up. It's kind of like a little brief summary for right now. And so I use the EMA right here, so I can see when this breaks out and it does a reversal. So as you can see here, it's trending down. In the EMA, this price, the price of the stock, it goes down here and it bounces. And so on this, it's going down, and it goes down here and it bounces on the EMA, and then trends down, and then bounces on there and trends down. And so you can use that a lot to tell when the price is going to bounce or when it's going to reverse. And so as you can see here, you saw these price bounce, and price bounce. And then you can see here that it completely shot up, and it broke this basically resistance of the EMA. And I use that to show where basically like where's a good buying point, where's a good selling point. So as you can see here, this is a good buying point right now because as you can see in the future, it did trend up. So once it broke above there, and then it goes in here and it bounces like it was going down, but it bounces going up, and then it comes up here, bounces, and then bounces going up. It's really cool to see that, especially you can just see the history of it, and it constantly does that. And all the other stocks, as I can go to other ones, we'll just go to DRN, which is a real estate leverage ETF. As you can see here, it goes up here and it bounces, and then the EMA, it really helps you to tell where those quotes are going to bounce at, and it tells you a good starting point. So we'll go back to DGAS real quick, and you can see that it's a good time to buy here. Like once it starts to bounce, as you can see here, good time to bounce, to buy, and once it bounces, and so on here. So that also tells you that, and also a good time to sell when it goes underneath, which I'll go back over here. I'll show you. As you can see here, it's a good time to buy once it crosses the EMA, and then once it trends down like this and it crosses underneath the EMA a decent amount, and you're gonna have to decide when to sell it once it goes underneath, then that's a good time to sell right there, because then it starts to do the opposite, where it bounces going underneath. And so the EMA also, like when it's pointing up, as you can just say, imagine if this stopped here and you just drew an arrow, is it trending up or is it trending down? That's also shows you kind of where the future of it's going, of the stock price. And so you can do like day trading and long-term trading, as you can see here, or not in long-term trading, but swing trading is what I like to do. So as you can see here, I held the stock for a few days. I was kind of from 2.1 to 2.6, and it was over a weekend there. I held the stock, and I used it to make some good money off of it. That was about a $300 trade right here from there to there. And also from here I day traded. As you can see, these two, they're on the same, basically like right above each other. That would like basically indicates a day trade. And as you can see here, another day trade, and there's one up here too. Let me see, yeah, another day trade. So I do use that. Let me go to the day chart, and you can see where I traded it. It doesn't necessarily show right now where I did buy in and sold. Okay, so here today, as you can see here, right at the beginning of the day, the price shot up, and I waited to here. This is when I bought in, and I sold about here. And so I saw this, and I saw it was bouncing, and then it hit here and bounced up, and I was like, okay, it's going to bounce again. So I bought in here, and obviously right now, day trading, it's a little different when you're doing with EMA stuff, and you also have to deal with the MACD indicator and the RSI. But here I bought in here, and it trended down, and as you can see here, it bounced, but it didn't bounce. It crossed above, and then you can see here it started to bounce and bounce and bounce off the EMA. But I did sell here because I didn't really like the trade. But if I go back a little ways, you can see some other times during day trading hours. These are minute quotes right here, minute periods, and so each one of those bars equals a minute. So you can see that it starts to bounce and bounce and bounce. Same thing with over here on when it's decreasing. So you can use that a lot when trying to do more manageable trades and kind of plan out your trades. I had a lot of success with using EMAs and also the MACD indicator and the RSIs. But I think it can really help you with trades, and you can make more detailed decisions and also find the best buying and selling point when dealing with EMAs.